This is Bitcoin's colored volume bars. 4 distinct colors, each representing something drastically different. However, when you zoom out, you start to see something very deadly forming. We're going to cover what that is and what it means for Bitcoin as we speak. Let's dig into it. Why do you think people get into crypto? I was curious, so I ran tons of surveys and I was shocked with the results. Turns out, it's not about getting rich quick or Lambo or even becoming a millionaire. The high majority of people wanted financial freedom, more time to travel, and no more worries about money. So I looked through the whole crypto stratosphere and nobody was teaching about this. Everyone was teaching how to get rich quick and Lambo. This became my life's mission and my sole purpose on planet Earth. And for the past 3 years, me and my team have put our blood, sweat, and tears into building the best membership site that will actually impact your life in a positive way. And today, we're opening the doors to you. Sign up today and get an exclusive trade alert for the month of March and an exclusive live video with me, plus cash giveaways. This is your moment to have a fresh, new path. Let's do it together. Be a part of my inner circle. Sign up now and achieve that dream you've always dreamed of, financial freedom. CryptoCrewUniversity.com. Again, that's CryptoCrewUniversity.com. Limited time only. Now, we are here on the Bitcoin US dollar index. We are on the weekly chart. We have price action above and we have Bitcoin's colored volume below. What you can do is go to your indicators tab, type in colored volume, and you're going to pick this one from Lazy Bear, right? When you plug that in, what you're going to look at is the settings. You're going to make sure that the inputs are here and the styles are here. Once you have that set, you will have your chart look exactly like this. Now we have 4 distinct colors. The first thing on our agenda is, what do these colors mean? In the big picture, you have this green and blue. Green and blue is very good. And then you have red and orange. Red and orange is not very good, okay? Now the green is the best and the red is the worst, but here is how these things are defined. As you can see, when we were near the bottom of our market, we were pretty heavy in our reds and we had a good bit of orange mixed in. When we started to move into the phase 1 of our bull, we started to change to blue and to some green, right? Now, when we had this test of our market structure, we started to move into some slight areas of orange and red, which is to be expected. In our move from phase 1, this was the end of phase 1 here, into phase 2, that's when we moved back into strong green and blue. Now, to get a little breakdown of what these represent, we have some rules here. It talks about the closing price of the volume, right? The closing price and the volume. If they're greater than the relative range that they're compared to, the bar will be green. If you're comparing the closing price and the volume and the closing price is greater, but the volume is not, the bar is blue. Okay? So there's our green and blue. That's the very bullish stuff. Now, if the closing price and the volume is less than the range you're comparing it to, we have an orange bar. And if the closing price is less, but the volume is not, the bar is red. Tilt your phone to the side and subscribe. But again, there's a larger problem brewing, and this is something that we have discussed in great detail. We had another chart that I showed you with our volatility, with Bitcoin's volatility really falling since 2013, 2012. And what you can see here is the volume. I'm not giving you what I think is going to happen. I'm not giving a coin flip scenario. There's not, oh, maybe this or maybe that. These are just factual pieces of evidence. Now there's 2 facts that I want to talk to. This white line and this white line. Let's first talk about this one. When we zoom into this white line, what you'll notice is that this whole first area of our market cycle was the most bullish part of our market cycle, right? If you look at this whole cycle sort of as one larger cyclical nature move, this first part is the most bullish. And I do believe we are going to get another one of these after a larger flush out happens. More on that in a moment. But what you can see clearly, even if you're blind in one eye and you're half dumb, you look at this and you're like, man, it was bullish as hell in the beginning, right? It doesn't take a rocket scientist to figure that out. What you'll see in the volume is that the volume is painting a clear picture of when that huge momentum left the market. It was really the entire first cycle and almost the entire second cycle in one. That whole cycle was the most bullish part, right? And you can see back in April of 2013, that's when we peaked. We peaked at our volume right here, and this was kind of our blow off top of that, creating some strong bearish divergence, right? Where we had the price going up and our volume went way down, incredibly strong divergence, blow off top, and that led us into this was our first textbook bear market. Yes, this was a bear market here, but there was just too much bullishness in the market for it to be a textbook bear market. This was the Bitcoin's first textbook bear market, okay? Led by this bearish divergence in the volume in our blow off top. So what you can see here is from October 2010 to April 2013, we had these green bars getting a higher high, another higher high, and another higher high. Now, when we look at our second white line, this is where things start to take a turn, because if we look at this green line right here from February 2012, it represented our phase one of the bull. We came out of our short-term bear into phase one of the bull. We had this beautiful green line. And from there, we continued to make lower highs, right, outside of the anomaly of this one, which was our, again, we've already discussed this, our blow off top, the highest volume, et cetera, et cetera. From here, with our next one in 2015, was a lower high. And then our next one in 2015, again, another lower high. And then you get into 2018, another lower high. And then you get into 2020, another lower high. And then you get into 2021, another lower high, and so on and so forth. We've continued in volume to make lower high after lower high after lower high. Now, that is concerning for a multitude of reasons, but I want to state a couple things that are very apparent here. What you have in our cyclical nature of Bitcoin is each cycle is getting weaker and weaker by a factor of 5.3. Again, this is not up for debate. This is factual evidence. Every cycle that Bitcoin has had so far has been precisely 5.3 times weaker in the next cycle. So for example, if you take this cycle from the bottom to the top, 5 divided by 5.3, it equals the strength of the next cycle. And it's happened every single cycle so far. So naturally, with that, you have volume that is diminishing. However, there's a broader thing at play here that we have to take into consideration. Most people are saying, hey, this time is different. We have the ETF, it's going to be crazy bullishness and boom, 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 boom. That never happens unless the cycle finishes. The cycle has to flush out. The cycle has not flushed out. Period. If you look at it from any angle, you can look at it from the volume angle. You can also look at the volatility angle, which I showed you in some prior charts. It's somewhere here. When you look at this chart here that we have in front of you, it's the volatility of Bitcoin, right? From 2013 until now, it's in a pressure cooker. And this is not a bullish pattern. This is a very bearish pattern. This is called a descending triangle. A descending triangle by nature has its resistance zone up at the top, which has a high and lower high and lower high and lower high, multiple lower highs, multiple touch points, and has the same base. If you have the same base and you have the same touch points with lower highs, that is the definition of a descending triangle. The high majority of the time, descending triangles break to the downside. That doesn't mean they can't break to the upside. It just means the high majority of time, they break to the downside. So it's highly probable we're in some sort of a pressure cooker. It's highly probable that we have less and less volatility coming into Bitcoin. With that, we have diminishing returns by a factor of 5.3. With that, we need one final flush out. And again, our volatility is in the 40-ish, 30-ish range here. It can break into the negative numbers. Well, some people will say, oh, that's not possible. Just look at the facts. Right here, it goes down into the negative 50 area, okay? Just facts. So if we have our volatility showing this and we have our volume showing this, but everyone wants to say this is going to be the biggest cycle, it's just not realistic. A $500,000 Bitcoin in this cycle is not realistic. $1 million Bitcoin, not realistic. Even a $400,000 Bitcoin, it doesn't appear to be in the cards for Bitcoin. What we need is a flush out of this, and then a reset, and then this whole cycle will repeat. All of these years will repeat. In my opinion, this is like a 20-year cycle for Bitcoin, and we'll have a flush out, and that 20-year thing will repeat, and we'll probably start out with absolute bang, and that first part of the cycle will be all of that build-up tension that Bitcoin has had for years. And at this time, a flush out would be phenomenal for Bitcoin. There's still ridiculous amounts of scams. There's just too much fraud. We need a complete flush out of all the crap. And luckily for us in our space, there's so many smart people developing incredible things. And every market in human history has these larger flush out cycles, and then the whole thing will repeat again. The stock market does it every 30 or 40 years. It will have a huge flush out. It'll have a 10-year period of growth sideways, and then the whole thing will repeat, and incredible intense bullishness comes back into the market, and then the whole thing goes over again, right? So that's what I see happening. Again, it's not a popular thing to say. It seems incredibly unlikely in most people's eyes, but they are blinded by all of this, shiny objects and bullishness. So now let's get to the craziness that's been going on and talk more about the short term. Now we have a good understanding of this colored volume indicator. We have an understanding of what each color represents. We have an understanding that, hey, this cycle right here could definitely repeat in the future after a full-fledged flush out. Right? We understand that volume is going down. Let's take a look at what's happening. Right now, Bitcoin is in the situation where it's on a potential verge of a break into phase 3. Phase 3 is a major part of the bull run. Phase 3 is incredibly important, but phase 3 has not been confirmed yet. We're teetering. We've got information coming in that we could be transitioning to phase 3, but we've got to have confirmations in the chart. So here we are, right? Each of these is weekly. So right now we had a situation where we were in phase 1 of the bull. And by the way, I need to say this. Everybody is getting too emotional. What you want to do is you never want to get too excited on the way up. You want to remain level-headed. And you never want to get too depressed on the way down. You want to remain level-headed. The ones that stay level-headed make significantly more money. Emotional people always lose a large amount of money because it's purely emotion-based. Many of you should stop trading or trade way less. I beat you guys over the head with my strategy for the past 300 days. My strategy was very, very simple and very, very basic. I'm going to do all of my buying at the bottom of the market. I kept beating you guys over the head when we were at 17,000, 16,000, 15,000. That it's highly probable that the bottom is in and that you should be. It's way more risky to be out of Bitcoin than in Bitcoin. You should be in Bitcoin. It's highly likely that the bottom is in. Roll the clip. The charts that I studied and the charts that I've been studying for years and years and years are saying that the bottom is in. And your wake-up call is, even if the bottom is not in, is more risky to be out of Bitcoin right now than in Bitcoin because there's a higher probability that the bottom is in. So if you're waiting for prices to dip below 10K, I don't think it's ever going to happen. So my strategy was, look, buy a bunch at the bottom and finish my buying in phase one. That's what I've told you guys for the past couple hundred days. But a lot of people are in and out of trades and trying to guess if we're going to go up or down. And then they're looking at all the shiny objects, and everywhere you look, there seems to be, oh my God, this coin's going up and this coin jumped up this today and this coin. You should take all of that stuff and throw it in the garbage and take a deep breath. If you're guessing on your trades, you don't have a strategy. You don't have a strategy. You've got to get a strategy. You've got to start with education. This is a game of professionals. If you think you can just jump into a professional sport and try to play with the big dogs, it's not going to work. There's no professional sport that you as a normal human can just jump in without all of the training and the education and the knowledge and the wisdom. You've got to get that with Bitcoin. You have to get that with crypto. It seems from the outside looking in, everybody's just getting rich. That's not the case. Bull runs are very exciting and emotion. Humans have always struggled with emotion. So first and foremost, you have to get the education piece. You should trade way less. Look at me. I was buying at the bottom and in phase one. I'm not going to do much of anything until we're somewhere near the top. I'll take some profits. That's my strategy. I've beat you guys over the head with it, but everyone wants to know what Bitcoin's going to do tomorrow and the next day. I just don't care. As I mentioned, it takes the same amount of energy, time, and effort to make a $100 trade as it does to make $1 million trade. It's the same amount of time, energy, and effort. So I focus on the big trades. I could care less what Bitcoin is going to do tomorrow or next week. I don't care. I've done all of my buying already. The next time I'm going to do anything is when we're near the top. It's very simple. So everybody gets too emotional and they feel all of this pressure from social media. Oh my God, this person's making money and this person and this coin is going up and this project is skyrocketing. And there's all of this FOMO happening. And then people make emotional decisions and then lose a lot more. But it's guessing. There's no actual trading strategy. It's just, well, I think it's going to go up, or oh, I'm going to sell. I think it's going to go down. That's a emotional trade. You have to get rid of that and stay level-headed. You never want to get too excited on the way up. You never want to get too excited on the way down. You want to avoid all of the news. You want to avoid all of the shiny objects. Who cares what coin is doing what and all of these opportunities you missed out on? What I know to be an absolute fact, and I've been trading since I was 16 years old, is no matter what the opportunity is, you play it up in your mind like, oh my God, I missed this huge opportunity. That was such a great opportunity. Why did I miss this huge opportunity? Let me let you in on a secret. You're going to have like 27 more of those exact same opportunities in your life. But you have to have better education so you know what to do with those opportunities. They will come again. I guarantee it. It may feel like this is a once in a lifetime. This was a huge opportunity. It will come again. Countless times. The next time you have to be better prepared and more educated. That's why I built my courses. That's why I built the FFA. That's why I built the indicator bundle to help people get on the right track with their trading. So now, where are we at with Bitcoin? We transitioned from this bottom of the market where we are in a whole bunch of red and in a whole bunch of orange. And we transitioned into phase one. Phase one finally took us out of these red, orange, and we finally started to get some blue. And then we finally started to get some green. Keep in mind, we had our volume kind of dwindling when we were in phase one, which told us that, hey, we're probably going to go sideways. We're losing a little bit of volume. We're still in green. That's great, but we're probably going to end up going sideways. And we went sideways, and then we transitioned into a small period of orange and a small period of red, and then this was kind of the final flush out. This is when we had a double dip. We covered it in multiple videos that we had, but we had a double dip, right? It was the wave trend. If you guys remember our wave trend, let me pull up the wave trend, so you can have it here. The wave trend had a double dip at this exact moment. We called it an incredible buying opportunity because the last time we had a double dip was the COVID crash, when everyone's like, oh my God, world's over. No, we just had to double bottom and we had a double dip. A double dip is basically like in phase one, it gave you another golden opportunity to buy. And that's what we had at the very end of phase one. So we are at the tail end of phase one. We had this bottoming out here, and then we finally transitioned into some strong green. And you can see our volume from October of 23 until January of 24. We're starting to see an increase of volume. Look for that to continue over the coming months and for the rest of the year. It's likely that we're going to transition into higher and higher volumes as we move into our resistance zone that we have been forming literally for 12 years, literally more than 12 years, forming this downtrend in our volume, right? But what you'll notice is we're in that transition period between phase two and phase three. It gets very excited, but you're going to remain level-headed. Never too excited on the way up, never too depressed on the way down. And what you want to notice is that transition period from the tail end of that phase two into the beginning of phase three. So if you look, we had dwindling volume, dwindling volume, dwindling volume at the tail end of phase two, right? Dwindling volume, which we just covered, we had that. Then we had this bottoming out. Then we started having higher volume, higher volume, higher volume into the beginning of phase three. Now the question is, if we actually move into phase three, how healthy does it look, honestly? And we need to get to that in some other charts. That is a key factor because this phase three, this was really short-lived. It was not a healthy phase three. Very short-lived here. We had some volume come up into our resistance zone, and then we finally had that flush out. This was our market cycle top. We had our flush out. The volume was like, hey, you know, we're at our peak's end right here. And then we started to see a big decline in volume, and then the whole thing fell apart. We had major divergence happening from our first top to our second top, and then the rest was history. So that transition period from phase 2 to 3 here, critical. Let's study the past cycle, phase 2 to 3. So here's the bottom of the market. Here's phase 1. Here's phase 2. This is the tail end of phase 2. This is the beginning of phase 3. So you look at the tail end of phase 2. Phase 2, we had this volume come up here. We transferred into the blue, a little bit into the orange and red, and then we started having higher volume, higher volume, higher volume into that beginning parts of phase 3. So that's what we're looking for right now. You can go all the way back into this part. This is bottom of the market. This is phase 1. This is phase 2. This is the transition period from phase 2 into phase 3. And you can see dwindling volume, dwindling volume, dwindling volume. At transfer into blue, we did not see any orange or red here. And then we started seeing higher volume, higher volume, higher volume. And that was that transition into phase 3. So this phase 3 was so powerful that we had an enormous correction just to catch our breath. This was an 80% correction in the midst of the most powerful bull run Bitcoin has ever seen. So you have to be ready for anything. When things are unhealthy, this was an unhealthy, exuberant move up. Look at all these green candles in a row. I mean, these are weekly candles. We literally had 15 weeks in a row with green bars. So yeah, we needed to cool down. This was an explosive move, and you can see that was the most explosive part of that entire cycle. So what we're looking for in these coming months for Bitcoin, when you look at this chart, is a continued rise in volume, right? We need a continued rise in volume to show the health and strength of this bull run, and it's likely that we're going to see some resistance inside of this channel. But right now we're blue. Expect in the coming weeks to move into potential green. We want to avoid the orange and red. The orange and red will tell us that a larger move is coming where we could have a little bit of a scare in Bitcoin. Keep in mind, this is a bull run. Every single bull run in Bitcoin's history, we have multiple 20% corrections, 30% corrections, and sometimes even 40 or 50. And on rare occasions, what I showed you was an 80% correction in the midst of a bull run. So we have to be ready for that. And you have to be ready to jump on and add to your positions in these types of markets, but with a strategy. You have to have a clear-cut strategy before you enter a trade. You have to know exactly when you're going to get out of the trade and why you got into the trade. What is your actual step-by-step strategy to get into the trade, and where your stop loss is going to be, what your risk and reward is going to be. You need to document it all in your trading journal. There are so many steps to the game. You can't just jump into a professional sport and hope for the best. It doesn't work that way. So love these colored bars. Pull them up on your charts. Let me know in the comments down below what your thoughts are. This bull run is our road to 500,000 subscribers, but I need your help. Today, tell one person about our YouTube channel, how we spit facts, go against the herd, take no paid sponsorships of any kind. Road to 500,000, let's go.